What's happening, friends? Welcome back to Dynamo DeFi. My name is Patrick, and on this channel I talk about cryptocurrency, decentralized finance, and economics. In today's video, I'm going to present 7 questions that you can ask when you're analyzing DeFi and crypto projects to understand if they would be a viable long-term hold. This is another educational DeFi investment video. And the reason why I think that this is an especially pertinent topic now is that it seems to me that we are almost certainly in a bear market right now, or rather are completely certainly in a bear market right now. And that means that it could be months or even years until we get another major upswing in the crypto markets. That doesn't mean that we won't necessarily have bumps or small run-ups before then, but given that it could take that long, it's really important to be looking at every project that you put your funds into as something that is built to last for the long term. And so in my view, it's not the time to be flipping small microcaps. And so given that, I'm going to talk about these 7 questions that you can ask. 3 of them have to do with the product that's built. 3 of them have to do with the tokenomics of the token associated with that product. And 1 of them has to do with the team and its funding and backing. Cool, lots to cover today, so let's get into the video. First thing to understand is why exactly am I saying that I think we're in a bear market and that it could be a while before things turn bullish again. And by the way, this is not saying you should exit. I mean, yeah, if you haven't been outside in a few months, go outside, please. But you should always go outside. But this is actually probably a better time to be looking at good projects and buying in than it was, over here, over in November when everything was 10x valuations, 10x valuations from where it is now. Now is the time where you actually can start to get some decent deals. However, the problem is that by the time we turn bullish again, not every project is still going to be around. And some of the ones that are around now might no longer have a viable product market fit or a viable business model. And so that's basically what I'm hoping to answer in this video. And part of the reason why I think it's going to take so long is if you look at, for example, the Nasdaq, so the index of tech stocks, that is also down significantly. And tech stocks, as risky as they are not as risky as crypto assets, right? Many of these are companies that have billions of dollars in actual revenue. They have tens of millions of users. And I mean, that's more people than use crypto in a month or use most chains in a month. And so basically it's, until people sort of start to turn bullish on traditional tech again, it's tough for me to imagine some broader crypto market swing upward. Doesn't mean there won't be run-ups in the meantime, doesn't mean that individual coins won't do well, but it's really tough for me to imagine the entire market turning up with these sorts of headwinds. And keep in mind that we've never actually seen how crypto behaves in a full-on stock market bear market. We've never seen how it behaves in a recession because Bitcoin was so young during the previous global recession that we never really got a chance to see how it would trade, right? And so basically that's sort of where I'm coming from. And if you look at another quick stat, Ethereum daily transactions peaked in May of last year, so 1 year ago, and they ran up, of course, in the fall of this year and then have been kind of steadily going downwards since then. So they seem like they might be sort of flattening out here around 1 million or 1.1 million a day. But until we see those start to resume their trend upward as well, or other sort of comparable stats, again, it's tough to imagine. It's tough for me to say that retail interest is returning. And so with that being said, there are still some good projects that you can invest in, and I still love the crypto space. I'm making it my career. So what are the questions that I like to ask? And remember that no project doesn't necessarily need to fulfill all of these, but ideally they should satisfy most of these questions. And so the first question, and you should always ask this, is what problem does this product solve? So straightforward. Avalanche, for example, this was a coin that I invested heavily in with my personal portfolio back during last summer when things were bearish. It was between $10 and $20 at the time. Its peak, I believe, was around $140 at the top of the bull run, although I won't claim that I sold the peak. Usually what I do is I wait for the first pullback after a major run up, which I think was around 120. But yeah, so why did I choose AVAX? Basically because there was a problem at the time, and there still is to some extent, where Ethereum gas fees are too high. They price most people out of DeFi and NFTs. And AVAX was an EVM compatible chain, or one of their chains was EVM compatible. And the fees at the time were very cheap. But one thing that it satisfied that I liked was that other chains, other EVM compatible chains like Binance Smart Chain were highly centralized, and AVAX was at least relatively decentralized. It had something like 1,000 validators, which isn't nearly as many as Ethereum, but was significantly more than someone like Binance Smart Chain. So that was the problem that AVAX solved, and you should always ask that question. Next question you should ask is this project unique? Is the product unique? Because there are many products that you see that solve a problem, that has to do with trading or some sort of farming project or some sort of marketplace for NFTs. And, it might solve a problem in that people need a marketplace for NFTs, but, how is it different than existing marketplaces, right? And you also have to ask, is it a fork? So a lot of times you'll see dexes that are, say, the first dex on a chain. Maybe it's unique because you're bullish on that chain, but did the team actually build anything unique, or did they just copy and paste code from another project that existed on another chain? Because if they just copy and pasted, then would you really expect them to build something unique in the future, right? And so that's something you should always ask is the product unique? And then the final thing, and this one I'm sort of borrowing from someone that you've probably heard of, Elon Musk, but the third question that I would ask is, do you personally use and believe in this product? Let me just read you this tweet. So a few weeks ago, Elon tweeted, "Since I've been asked a lot, buy stock in several companies that make products and services that you believe in. Only sell if you think their products and services are trending worse. Don't panic when the market does. This will serve you well in the long term." So obviously, we're just person in the world, so he knows a thing or two about making investments and money. And yeah, I think this applies to crypto as well, right? Because you're not buying stocks, but you're buying crypto. And so you should ideally ask, is this product something that you would personally find useful? And that was one of the things that led me to Avalanche, that led me to a number of other DeFi apps that were successful investments over the past year. That led many people to invest in Abracadabra last summer. I did not because I wasn't using Ethereum DeFi at the time, but many people bought Abracadabra and made well over 100x on it just because they said this is a useful protocol. And so that's a good question. That's always helpful to ask. And it can also, sort of like Elon mentioned, it can give you a framework for when you should exit the investment as well. Because if they make good products and you find them useful, eventually, if they stop doing that, then that's a sign that maybe your thesis was invalidated. Next question that I like to ask, and this is when we start to get into tokenomics, is what is the fully diluted value? So you might find a project that has a great product, really useful, but sometimes crypto products will only have 5-10% of their circulating supply actually out there on the market right now. And so basically what that means is by the time we get another bullish cycle, it's possible the circulating supply could be 3-5x higher than it is now. And even if it has the same market cap, your tokens are going to be worth a lot less. So for example, and I'm not trying to pick on any one project, but I think this is a good example. Serum, SRM, is a decentralized exchange on Solana, and it's built by a strong team. It has pretty good activity, and the market cap right now is around 369 million. So you can decide for yourself whether you think that's a fair market cap. It's probably in line with other major dexes on competitive layer ones. However, something to consider is the fully diluted valuation is $12 billion. And you can find this information for most coins on CoinGecko. Usually I find CoinGecko is more reliable than CoinMarketCap for this. But so Serum, the fully diluted valuation is $12 billion. And so So that basically means that eventually there are significantly more tokens that could come out onto the market, and that means that your stake now will be heavily diluted. So that's something you should always ask. However, something else that's important to understand is when are they coming out onto the market, right? Because it's possible that these 10 billion, so total supply 1 billion, max supply 10.1 billion, it's possible they'll never hit the market. So the other thing you have to always ask is, what is the inflation rate and unlock schedule? So if it was inflating 2 or 3x a year, yes, that would be not very good. But maybe it's only inflating a little bit a year. You need to understand that. And a good place to find that is to go to the project's white paper, right? Usually they'll have a section in there that has to do with tokenomics or unlock schedule, thing like that. There's also some good resources for seeing unlocks. For example, there's this Substack I came across, unlockscalendar.substack.com. It just has some updates on major token unlocks, but pretty well researched stuff on here. And then there's another good website, vestlab.io, I came across, and this is really solid. Look, it just has a list of all of these major upcoming unlocks. So if you have a token you're researching, maybe you want to go on here and see if it's got some unlocks coming soon. So if you see that it has an unlock coming in 6 months, then you have to ask yourself, do you think that the market's going to turn bullish before 6 months, and how much is being unlocked? Because if it's a significant portion of supply, then perhaps one would rather wait until after the unlock to buy. So that's the next question with tokenomics. And then the final question that I like to ask with tokenomics, at least the final major question, is where does the token derive its value from? Because there's many, many good projects. Let me find an example of this. And again, I'm not trying to pick on specific projects because many of these have strong teams. But let's look at Aave, for example. Aave is one of the most used projects in DeFi, in crypto really, huge TVL, almost $9 billion in TVL, but its market cap is significantly below that. And why is that? Because the token doesn't really have any value, right? You don't need to hold the token to use the protocol. And it's not like when people use the protocol, they're not paying any sort of, the fees from the protocol are not getting distributed to token holders. It's a governance token. And sometimes governance tokens like Curve, people will bribe them. But if they don't do that, then why does the token actually have any value at the end of the day? And so that's something you should always ask. And it's possible to think a project is good without investing in it. I love Aave. I am not invested in Aave. An example of a token that I like the tokenomics for is GMX. GMX I've covered on this channel before, and it's a decentralized exchange. But the thing I like, and again, this is just an example, is if you go to their tokenomics page, then you can see that you can stake it, and 30% of the fees generated from swaps are converted to either ETH or AVAX, depending on what chain you're on, and they're distributed to GMX tokens. So if more people use the protocol, they pay more fees, and more money gets distributed to token holders. So basically, in this case, you are receiving value from the protocol directly because they're paying out fees to you. And so that is the sort of value accrual that I like to see. Not a big fan of buybacks either. They sometimes can provide some price support, but generally, I think they don't nearly accrue the same level of value to the token as paying out fees directly. And partially that could be a psychological thing, but I think if you look at projects over time that do that, it often buybacks just do not work to meaningfully move the price. And that's basically some of the essential questions I like to ask about tokenomics of a project. And then the final thing, and this is a little bit trickier to research, is does this project have the resources to survive in an extended bear market? A lot of projects are going to die, guys. A lot of projects won't make it another year, and that's because either they don't have the treasury to continue to pay developers, or maybe it's a 1 or 2 person team, and if the project isn't making any money, they might have to move on to work on other things, or they just can't gain the traction in that time that they need. And who wants to work on something that isn't gaining any traction? So there will be projects that will die or be abandoned. And so what you want to look at is, first, do they have the treasury to survive? And this is tough to find because many projects don't have that readily available somewhere, but you can dig in their Discord, you can dig through their docs if possible, find out if they raised money, how much they raised, and so on and so forth. And then another thing that actually can be important is you want to see who is backing them, right? If they have major backers, then those could be people who will be incentivized to prevent the project from dying. And I'm not going to say that it's necessarily all good when you see that a major fund is invested in a project, because there are downsides to that as well. But one upside is that it's less likely the project is going to be abandoned and die, right? Because they're going to be accountable to those investors, and those investors will be incentivized to help them out if they get in a tight spot. And those are the 7 questions that I like to ask to see if a project is viable for the long term. Would love to hear what other questions you all like to ask. You can comment them down below. And also, if you have any projects that you are accumulating for the long term, let me know. Right now, I'm mostly focused on Bitcoin, Ethereum, and a couple DeFi and Layer 1 projects. But I'm mostly right now waiting to see which direction the market goes myself. And that's all I got for today. Until next time, this is Dynamo DeFi.